I've been investing consistently for the last 5 years, and I've been able to grow my personal net worth to over 150K invested. So in this video, I'll be revealing my entire investment portfolio and breaking down my contributions and gains over time. I'll also be sharing some tips on what worked well for me and what I would have done differently if I were to start all over again. If you're new here, hi, welcome. My name is Amanda, and on this channel, I'm documenting my journey to reach financial independence. If that sounds interesting to you, feel free to click that subscribe button to follow along in our journey. Before we get started, I do want to preface by saying that all the accounts that I'll be sharing today will be for my accounts only. If you're familiar with my monthly check-in videos, then you'll know that I show values for both my husband and I. If you want to know how much we have invested together, then feel free to check out one of my most recent financial check-in videos. I'll link it up there. I also started investing when I was living in Canada back in 2019, but after getting married, I moved to the US, so I had to liquidate all of my Canadian investment accounts for tax purposes. From 2019 to 2021, all of my investment accounts are in Canadian dollars, but from 2022 till now, it'll be shown in USD, so hopefully that won't be too confusing. Before we dive into my current portfolio, I do want to quickly share my investment journey from when I was investing in Canada. So this is my personal net worth tracker from when I was living in Canada. At the end of the month, I would check all of my accounts and then enter in the account balances to keep track of my financial progress. We'll only be looking at the investment accounts today, so I'll just hide the checking and savings accounts for now. So as you can see, I started tracking my net worth back in 2019, and I opened up my first TFSA account in February of 2019. It's the sort of Canadian equivalent to the Roth IRA, and my initial deposit was $1,550, and I believe I set an automatic deposit of $50 a week. And this account was a robo-advisor managed account, and it was using the growth portfolio, so I think that was risk level 10. What I did was I basically answered a questionnaire on my risk tolerance and my investment time horizon. It was my first experience with investing and getting my feet wet. Unfortunately, I closed my Wealthfront account, but I do remember that this account was up 24% before I had to liquidate it, and the ending balance was 17,000 Canadian. In 2019, I also started investing in crypto. I bought Bitcoin and Ethereum. I didn't really understand much about it, so it was fun to play with at the time of, and I only put in money where I would be okay with losing it. In 2020, I did open a Wealthsimple trade account, and this is just a regular taxable brokerage account. I was very interested in generating passive income at the time, so I bought dividend stocks, and it gave me the experience of buying stocks for the first time, so it was more of a learning opportunity. But looking back now, I shouldn't have opened this account since I still had so much contribution room left in my TFSA account. And for the US folks, the TFSA contribution room carries over from year to year from when you turn 18 years old. This means that if you don't contribute to the maximum for the year, you can still contribute to that account later on. But the Roth IRA, on the other hand, you have to contribute or you lose the contribution room. And then in 2020, I also opened a RSP account. That's when I started my current job, and they offered RSP matching. It was a group RSP account with RBC, and I chose the growth fund. At the end of 2021, I had a total of 47,996 invested. I did end up liquidating all of my Wealthsimple accounts. I consolidated my crypto account. I did carry over my RSP into 2022, and I kept contributing until I switched over to the US system. I was also preparing to move to the US and start my investment journey all over again. Okay, so fast forward to today, I'm now fully embedded in the US investing ecosystem. Looking at my current net worth tracker, you can see that I now have a 401k, a Roth IRA, 2 taxable accounts, and I still have my crypto from when I started investing in 2019. As I mentioned, I kept my RSP for another 2 years before I liquidated it in October of 2023. I could have kept it in Canada for it to continue growing, but 1, the management fee was really high, and 2, I also wanted more control over the investment account. All the values that I'll be showing now will be in USD. The first investment portfolio that we'll go through is my 401k, which is with Guideline. At the beginning, I only contributed up to the employer match, which is 4%. And keep in mind, I did start investing in this account when I transferred to the US employment system back in May of 2022. I eventually increased my contribution from 4% to 10%, and it wasn't until I think the end of November of 2023, I started contributing 20 to 25% of my salary. So I did make it a goal to max out my 401k in 2024, which I did end up doing. And I plan to max it out this year for 2025 as well. My contribution summary, it is projected to basically max out by the end of the year. So in total, I have contributed $48,395 for the last 3 years, and the current balance is $56,757, and the all-time return is 17.27%, which is about $8,300. Let's take a look at my current portfolio allocation. I am 100% invested in stocks, and I only have 2 funds with a 70 to 30 split. 70% is with VFIX, which tracks the S&P 500, and 30% is also allocated to VTSAX, which tracks the total stock market. I know these 2 funds have a lot of overlapping stocks, so if you're wondering why I have this weird split, it's because I can't decide. The performance of these funds are very similar. As you can see, the all-time returns are less than 1% from each other. But I guess you can say that the S&P 500 fund does perform a little better if you only look at the returns. On the other hand, the total stock market fund is more diversified with, I think, small, medium, and large cap stocks. So honestly, just pick one or the other and continue buying it. I would change my portfolio to just one of them, but I think I'll commit to this weird split for now. If I were to go back in time, I think I would probably just pick the total stock market in my 401k and then the S&P 500 fund in my Roth IRA. Okay, that being said, let's move on to my Roth IRA account, which is with Charles Schwab. So in Schwab, I've contributed the max each year since 2022 in lump sum amounts. In total, I've contributed $26,500, and my current balance is $33,429. Schwab doesn't provide the all-time return for some reason, but the all-time return is 26.15%, which is about almost $7,000 in return. In terms of what I have invested in my Roth IRA, it's basically the same as my 401k, but with the Schwab equivalent funds. I'm invested in SWPPX, which is the S&P 500 fund, and also SWTSX, which is the total stock market fund. And I also had the 70-30 split for my Roth IRA, but going forward, I'm just going to be investing in the S&P 500 only because I'm too lazy to maintain the split. So this year, I did increase the allocation to the S&P 500 fund. Now it's 76% of my portfolio, and then 23 or 24% is the total stock market fund. If you compare my 401k to my Roth IRA, it's also a good example of dollar cost averaging versus lump sum investing. For my 401k, I've been contributing twice a month for each paycheck. But for my Roth IRA, I've been contributing the maximum limit as a lump sum each year. If you compare the all-time returns, my Roth IRA has performed my 401k by almost 9%. History also shows that lump sum investing mostly outperforms dollar cost averaging, I think about like 68% of the time. Just something to keep in mind if you have extra money you want to invest and you're not sure if you want to put it in the market all at once. Dollar cost averaging or lump sum investing, either one is still better than keeping it in cash. So don't think too much about it. If you have the money, just invest it when you can. Moving on to my taxable accounts now. I do have 2 taxable accounts. The first one is with Schwab, which I opened in April of 2023. And in total, I've contributed about $13,000 to this account, and the current balance is $13,563. So the all-time return is 4.34% with about $564 in gains. This account is a lot newer and the market is a little down this time around, or in general, everything is just down. And I recently put in $2,000. So I think that's also why my return is very little compared to my 401k or my Roth IRA. And in this account, I am buying 3 different ETFs. I have SCHD, which is a growth dividend stock. That's 37 or 38% of this account. I also have SCHG, which is a large cap growth stock, and then that's 37% of this portfolio. And lastly, I also have VOO, which tracks the S&P 500 as an ETF, and that's almost 27% of this portfolio. The plan for this account is to allocate about 33% to each ETF. I am contributing $1,000 into this account every month, so basically I just buy 1 share of VOO, and then whatever I have left over, I split between SCHG and SCHD. Moving on to my other taxable brokerage account, which is with Wealthfront. I use their robo-advisor managed account. I do like robo-advisor accounts only because it's sort of like a set and forget approach. You don't have to rebalance it or anything. You just deposit money and it auto invests for you. The good thing about this account too is that it has tax loss harvesting. If a stock is going down, it'll buy like the equivalent of that stock just to offset for tax purposes. I started contributing back in May of 2022, and my contributions range from like $500 to $1,000 at some point. But now I'm contributing consistently $500 every month. I did stop contributing for almost half a year at 2 points, and I think that was because of home renovations that we had to pay for and some other things. I did have to sacrifice my taxable contributions. In total, I've contributed $17,000, and the current balance is $20,910. So an all-time return of about 33.62%. And I also saved about $148 from the tax loss harvesting feature. In terms of what's being invested in this account, the target is 45% US stocks, 22% foreign developed stocks, 19% emerging market stocks, 11% dividend growth stocks, and then the rest are bonds. So if you want to take a look at the ETFs here, I'll show pretty quickly, just VTI, TIOT, and SCHB. And then in terms of the international stocks, it's in VEA, SCHF, and VWO, and IEMG. For the dividend growth stocks, it's VIG, and corporate bonds, LQD, SCHP, and VTEB. So the robo-advisor does invest in quite a few stocks, but I do like it because it is a little bit more diversified than what I would probably buy on my own. So I do appreciate being invested in foreign international stocks and giving me that diversified exposure. The last piece of investment that I have is crypto. It's my longest standing investment since 2019. Everything else has been liquidated or created more recently. In total, I've contributed $14,300 to buy crypto, and my current crypto balance is $29,220, and that's about 104% all-time return, which is almost $15,000 in gains. In hindsight, I wish I bought it continuously ever since I started investing, even if it was just like a little bit, like $50 a week or something like that. But I recently did start buying again, and I'm dollar cost averaging about like $100 a week in Bitcoin. In total, I've contributed $119,195 across all my accounts, and the total current balance is $153,530 with a total all-time gain of $34,000, which is about 28.81%. The average of all my accounts in terms of how long I've been investing is around 38 months, which is a little over 3 years. The year over year, I think, comes to 8 or 9% per year, which I think that's pretty normal. The only thing I want to point out is that the markets are a little down right now. If I were to film this video like just 2 or 3 weeks ago, I think my gains would be over like 35% in total. Yeah, even though the market is down, you can see that as long as you're stayed invested in the market, you'll still have a return over time. If you want to take a quick look at this graph that I prepared, it kind of shows how much I've contributed compared to how much the account has grown. And every account has grown quite a bit, except for my most recent taxable account, which is understandable since I invested at the beginning of this month and then the stock market's tanking. So the gain is pretty minimal here, but everything else I've been investing over 3 years now. Crypto sort of being that outlier, gaining over 100%. In terms of the portfolio allocation, I've broken it down here with US stocks being 70% of my portfolio. I have 5.53% in international stocks from my Wealthfront account, 4.8% from growth dividend stocks, that's from SHG and VIG, 0.5% in bonds from my Wealthfront again, and then crypto is about 19% of my portfolio. In total now I have $150,000 invested. I would say pretty good, given that I had to restart everything within the last 3 years. But going through that investment experience in Canada with my TFSA and my RSP account, it did give me a lot of experience going into the US system with the game plan. So some things that I would have done differently though was I would have maxed out my 401k before opening multiple taxable brokerage accounts. You can see I opened my Wealthfront taxable in 2022 and then my Schwab taxable in April 2023. I should have just maxed out my 401k first before opening those taxable accounts. I like to think that I'm an active investor, but in reality, I like keeping things simple as much as possible. Another thing that I would have done differently was, again, dollar cost averaging into crypto. If I had continuously bought over time, I think I would have much more now. But the volatility of the crypto market is very intimidating. After holding it for over 5 years now, I would say I'm pretty used to it by now. But again, never invest what you can't afford to lose. And the last thing that I would have done differently was look at dips in the market as a buying opportunity. Every time the stock market went down, I didn't want to take a look because I was worried that I would feel sad, which could also be a good thing because I'm setting it and forgetting it and then just waiting till retirement to take it out. But instead, I should also see it as an opportunity to buy more because everything is on sale. I should be okay with looking at it and sort of doubling down on my contributions if I have extra money to do so. In terms of what worked for me to be able to accumulate 150k invested, I would say the first thing is to consistently invest, whether that's dollar cost averaging every week, every 2 weeks, every paycheck, every month, whatever it is, or lump sum investing. Invest as much as possible, as soon as possible. Time in the market definitely beats timing the market. So even if your investments are down one day, if you look at the long time horizon, you're probably still up. And then the second thing is to automate as much as possible. So set up those recurring contributions or deposits and adopt the set and forget it mentality. Try to make investing as easy as possible so that every time you get paid, you pay yourself first, and that way you don't have to think about spending your investment money. But obviously, invest what you can. And the last thing that I would say that worked pretty well for me is increasing my contributions over time. So I said before for my 401k, I started off with the 4% match from the very beginning. As I felt more comfortable with investing more money and I didn't need to spend as much as I was earning, I increased those contributions over time to 5 to 10%, all the way up to 20% to max it out. If you have the means to do so, definitely increase your contributions. It's totally worth it. Once you gain the investing muscle, it's definitely hard to stop contributing. If anything, you just want to continue contributing even more. And that basically wraps up this video. If you enjoyed it, please give it a like and don't forget to hit the subscribe button to follow along in my journey. My question for you is, how long have you been investing for? Or if you haven't started investing, why aren't you investing? Feel free to check out one of my previous videos here, and I will see you in the next one. Take care. Bye-bye.